Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, in your retirement here on the show. Our show is all about building up wealth and understanding the world today. Our motto and our philosophy is to save aggressively and invest conservatively. Save aggressively and invest conservatively. That's the key to building up wealth over the long term. You always want to start out with your company plans, your 401k, your 403b, 457. Those things. Put away as much as you can. We try to hit a minimum of 10%. We come across a lot of people that are putting away, they'll put away 6% or 7%, or 5%, based on what their matches are, and so they get the match and that's it. That's a mistake. You want to get you need to get closer to 10% plus the company match to be where you want to be. So, and one other thing with volatility in the markets out there, we had a bad. Really bad day Friday in the markets. The S&P 500 was down 2.7%. And we're going to be talking about that, some of the reason for that later in the show. But don't let the market volatility stop you from saving money. From time to time, we come across people that quit contributing to their 401k because it goes down, or put it in the money market fund if you're not comfortable with the markets, and put it in a short-term bond fund. But don't always continue that savings program, because if you stop and get worried about the market and you stop your savings and putting money into it, it's going to hurt your long-term wealth. It's going to hurt your retirement. It's going to hurt your standard of living when you retire. So don't let volatility in the market scare you out of making your investments in your 401k. If you're more nervous, get with people that can manage through these type of volatility, or just adopt a more conservative stance in your 401k plan. So we got quite a bit to talk about on the show today. Again, a lot of volatility, a lot of things happening in the world, and we're really trying to keep you up with these things. Our shows we've been talking about recently about the market, the importance of risk management in the markets. We talked about that. What's going to happen, where things are going to go, and what could go up, could go down. And we saw a good example of why risk management is important in the markets this week. Actually, Friday, it's really fascinating. I mean, if you look at the stock market during the week, so it's pretty good. Look at the S&P 500. Let me see if we can. It basically, we hit a new high on Thursday. I mean, it was all good, and then it reversed a little bit. Later in the day, went down, but hit an all-time high. And there was constant talk of of a new melt up in the market. It was going to go straight up, and everyone was pouring in. And then Friday, about 10 o'clock or so, President Trump came out and said that. They were having problems with China, and China was trying to prevent the U.S. from getting rare earth minerals, and he was not going to meet with. And China had become, quote, very hostile. The first it's always hostile, but that's all very hostile, And the president was not going to meet Xi Jinping when everybody meets for one of the big G7 or whatever they are meetings in Korea here in a couple of weeks, and the market started going down. And if you look at it, it pretty much fell off a cliff rather quickly. It went from about 60. It was up about 20. It was up about 20 S&P points to being down 180 S&P points. Most of that, over 2/3 of it, happened within a basically 40 minutes, and into a 200-point reversal in the markets, which is again a substantial drop. The S&P 500 was down 2.7%. If you look at the Nasdaq was down 3.6%. If you look at some of the other ones, the Dow did a little bit better. But it wasn't just there. It was across the board. Bitcoin was down 3.7%. If you look at oil was down 5%. Commodities were down pretty much across the board, with the exception of gold and silver, which we've been talking about. And looking at those, if you look at copper was down 6%. So commodities, Bitcoin, cyber coins, all those things everything was down except gold and silver, which again goes back to the situation, we've liked the sector, although this week we were really selling some things in small amounts. We've continued to try to really reduce our risk as much as possible. As we've talked about in the show, really highlighting the issues that we're really dealing with here in many cases with these markets. And so where do we go from here? And a couple thoughts when looking at this. The market has been very expensive. As we talked about it, if you look at market cap to GDP, total market cap to GDP, I think last week we quoted the Shiller Index. I think I want to say it was like 23 or something, and the record was like 25. And if you add in the changes in the tax law, it really make it apples to apples. We're like 27. It's the highest number. Almost any way you look at this, the numbers go back to 1999 or 1920. And you look at price to book, it just goes. There's just an infinite number of these things out there, and it's a very expensive market. The market has gone up on a wall of Federal Reserve money printing. The government is printing money. The government's been spending money for the last 5 years at 6.5%. About 6% of GDP per year. There was 1 year it was like 5 point something. And there was a number of years where it got closer to 7 over the last 5 years. That type of deficit spending as a percent of GDP, that tends to be a world war type of spending. That means your country's threatened, and you're having to just sit there and go all in to protect the country at war. And in a good economy, nobody does that except a madman like Joe Biden. And so to be fair to Joe Biden, he wasn't even all there. It was a bunch of radicals in his party in there. But so what we've seen is the markets have gone up. The Federal Reserve has been balance sheets has grown. They've been printing money. They kept money at zero for a long time on interest rate wise. They finally started raising it up. Quite frankly, inflation had to hit 8% before the Fed finally raised rates. And they've been wrong. They probably should have been cutting rates a little sooner. And so here we are right now with the sky-high stock market, in a rapidly changing economy, in a global trade war with high deficits, $37 trillion worth of debt. We're borrowing $2 trillion a year. Trump is finally starting to get this down. The good news is Trump has put these tariffs in place. That's going to raise about $300 billion. Okay. He in addition, he's getting factories coming back to the United States. He's using all types of $1 trillion numbers. Our numbers is $500 billion worth of factories are going to come back to the United States. That's going to give us growth going forward. That's going to help the deficit. He's trying to force the Federal Reserve down to cut rates on the short end to reduce the $1.2 trillion interest expense we pay. And then finally, he's cutting government spending through the Doge Commission and other things, which is going to lead to $200 or $300 or $400 million more. And so they're starting to get this down. But but during that time, this wall of money has been out there, and it's been pouring into the stock market. We have an AI mania. Is AI going to be here? Yeah, absolutely. Are all these guys going to make money after spending trillions of dollars in? Absolutely not. There's going to be winners and losers. There was winners and losers in railroads. There was winners and losers in electricity companies, utilities. There were winners and losers in the auto companies. There's going to be winners and losers in the winners and losers in the internet companies, and there's going to be winners and losers in AI. But right now, you can't quite figure out who's going to be who, so everybody's a winner, and the money's pouring in. And so to the point we've got multi-trillion-dollar valuations. And I say on the show numerous times, just because it's true, nobody even knows what the hell $1 trillion is. You can't even, if you can start counting $1 trillion, starting 1, 2, 3, 4. No one is going to live long enough to hit $1 trillion on their count. Nobody. And yet we bandy these numbers around like, I think the number's like 25,000 or something years. It's just utterly ridiculous. And so here we are. And what's happening? Gold is going up, silver is going up, stocks are going up, crypto is going up, assets are going up across the board because people are losing confidence in the debasement of the dollar. At the same time, the United States lost a massive bet. One of the most critical defeats in U.S. history was when Joe Biden in October of 22 decided he was going to bet the financial system and the U.S. dollar that we could defeat Russia, and he lost the bet. And by that, what I mean is, he said, "Look, we're gonna freeze the Russian assets at the Federal Reserve. We're going to try to kick them off the SWIFT system so they can't use the dollar-based system." At that point in time, Russia, China, India, Brazil, all these countries around the world, if there's any possibility they could be at odds with us, had to come up with a new alternative. And it's likely going to be some type of gold-based system. China's working on it. And Joe Biden handed the Chinese a gift on a golden platter. And he basically gave them the dollar. And so since then, gold, you can see the move up since October of 22, gold going up. Gold's going up the whole time. It's up, hit $4,000 an ounce. We've been talking about gold for years on the Max Out Savings Show, detailing these things. And so here we are today with just a remarkable situation in our hands. And so, the most amazing thing about this move yesterday, this decline yesterday, is every single thing went down except for gold and silver. Gold was up about 1%. Silver was up about 1.3%. Silver was over $50. Gold was over $4,000. And it just shows you really the strength of gold and the fragility of the financial system. To be fair, there was an enormous amount of liquidation out there. I've seen numbers anywhere between $9.5 to $18 billion worth of crypto funds were liquidated out. Huge amounts of people lost money in crypto. These were speculators on margin, and the same with stocks. And the question is, where do we go from here? And we're going to try to cover that after the quick break. But really, this was clearly a change. And what is this? It's just a situation that it's the end of the bull market. Is this a situation of the start of a new bear market? We're going to try to cover some of this in some of our thoughts about this right after this quick break right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. We're talking savings investments in your retirement here, and really. So what happened this week in the markets? And markets were good. The S&P 500 hit a new high on Thursday. The market fell apart. Donald Trump, as we said, came in. He talking to higher tariffs. 100% tariffs he put on. This came out about 10 o'clock. The market started plunging. Assets, fund managers around the world, money managers started, putting risk-off programs in place. It was mostly hedge funds, really, because they're the only ones that could move this fast, and started just dumping stuff. And people remember what happened last time we got into a trade dispute with China. The S&P fell about 10%. Many stocks fell 15% in 3 days. So it created somewhat of a panic. And so a couple thoughts on this. I was talking to a friend of mine about a mutual friend of ours, and they during World War II, they were working with critical materials, and they were in charge of some projects to handle those and get them for the United States in the wartime effort. And they always felt like that critical materials could lead to war. They felt that Japan's drive to get several critical materials out of Southeast Asia in the battle with him led to World War II. They had to secure those things, and that led to one of the things that brought the Japanese into World War II. And to the point that these people actually help make, they actually 15 years or so back actually did some investments in critical rare earths to try to see if they could come up with alternatives or different things with rare earths, because they felt these things were so critical that they could lead to war. And so President Trump this week said that he made the comment that, look, China has made a move to cut us off from critical rare earth materials. What they're doing is Chinese are requesting Chinese and foreign companies they need to permission to export anything with 0.1% of more of critical earth rare earth materials in it, 0.1%. So they're trying to shut off any avenue to get critical rare earth materials, and they're trying to choke off the United States of America. President Trump made some remarks. The original remark I saw that this was hostile, but and then again he said this is very hostile to the China's acting in a very hostile fashion. That's not a good situation, okay, for the President of the United States to say that. You can sit there and say, the President can say, the Chinese are trying to rip us off. The Chinese are doing this. The Chinese are doing that. They're trying to steal our jobs. They're trying to take our technology. That's fine. When you say the word very hostile, okay, that tends to be, that is a kind of a warlike connotation. And I think it's a serious thing. I think Trump is playing very hard ball. I think the Chinese are playing very hard ball, very, very hard ball. I mean, both of them are not messing around. If you look at the Chinese, they're not buying our soybeans. Well, it's kind of an easy thing for them to do. And you can say, well, they're going to start buying them when Trump settles things. But what if they have no plans of buying them? What if they have no plans of letting us get critical earth materials? What if they want to cut off all relations with the United States? What if they're expecting war in the future with the United States of America? And they're going to ensure that they win. Under Donald Trump, we're going to ensure that we win. Under Joe Biden, I'm amazed the Chinese didn't make a move on Taiwan while he was there. That was just a gimme. I mean, there was nothing he could do whatsoever. And they could probably take Hawaii and Biden would have folded. And I don't think that's I honestly believe that's the truth. And because he has weakened the United States so much. So the question comes in is, this is very tough talk between the two. Now, we're hearing all this taco talk of, Trump always chickens out. By Monday morning, they're going to have a deal to protect the stock market. Because the question is, are we running the United States of America for the benefit of the stock market or the future of the American people of the United States of America? And it's a fundamental question. Can I be candid? We've been running the United States for the stock market for the last decade or two, under multiple presidents, and during that time, China's gleefully allowed our stock market to rise where they were.
You have a call, Charles. Holding.
Okay. Just a second, Charles. We were stealing all our technology and everything else. This time, Trump, we're moving the factories back here. We're serious about getting things going, and so what that's going to do is that this makes it a much tougher situation that we're dealing with. And so I think this is a very tough discussion between the Chinese and the Americans. It's not easy, but it goes back. It's not simply a trade issue. This is for the future. This is what they're battling. Both sides are expecting some type of war in the future, and they're positioning, and that's what's not well understood, and that should be a concern. Now, let's take a quick call from Charles. Charles, welcome to the South Savings Show.
Good morning. Yes, I have a question regarding the rare earth minerals. Other than China, what would be the other, say, 2 or 3 major sources of rare earths? Would they be in Africa or Australia or Canada? Or, I mean, obviously, this isn't a zero-sum game here as such. So, are there any alternate sources, either in Latin America or somewhere else or the Far East, that we could go to and maybe develop, work some kind of relations or whatever?
Yeah, I think Africa has got the best amounts of them there, and there is. Here's the problem, Charles. Is the big problem is we don't have the mine, but the bigger problem is the processing, and we've got to get the processing back to the United States. They've got to put the processing because the numbers on China for rare earths is like 60% or 65% they have over there compared to the rest of the world. For the processing, it starts working to 80 to 90%. So the problem is we mine rare earths here in the United States, likely there's a good chance we might have to even send them to China anyway. So they're going to have to put processing plants in place. And if I just want to add one other quick thing here, is Look, and I'm hearing this is going to take 4 or 5 years or more to get the processing plants in. This is a lot of just garbage, to put it nicely, listening all these people can't get their stuff in. Elon Musk came up with he's putting his big Colossus AI center in Memphis, and he's coming to put it out. And he goes, look, how long is it going to take to get? Sir, this is going to take us 2 or 3 years to get this thing off the ground. He said, by then we'll have lost. So what does he do? He comes in, he brings in the best people in there. He gets a deal with people from Memphis. We're going to let you do what you want. He comes in, he starts building the factory. We can't get the electricity in there. He buys up 25% of the mobile generation capacity in the United States, rents it, brings it in, and moves it in until he can get his power in there. He brings in battery packs so he can sit there and spread the thing out. And he gets the job done in like year and a half. And that's what we did in World War II. And with these different types of things, they're going to have to use the Defense Production Act and other things in regulatory breakdown, and they've got to get fast track these things through because we can't take the risk. But I'm sorry, did I answer the question, Charles?
Well, in a way, yes. I mean, I know that they're going to be building. There's an outfit in California that's building a processing center here in Texas, but I just find it hard to believe that Canada doesn't have a processing center, nor does, say, Australia.
There is some of it there. Those are the two better ones there, but they don't have near the processing capacity. From what I hear, it's somewhat of a dirty business. And quite frankly, the dirty secret, a lot of what was exported capacity to China was because, basically everyone didn't pay attention because they didn't use any pollution rules. So they polluted the planet, and we acted like we'd done the world a favor, but we didn't.
Mm-hmm. Okay. So, and I guess there's no way to recycle any of the stuff that had been used in the past. I mean, I don't know.
No. I think that's a good point. I just actually saw something on X about somebody buying up DVDs and computers and doing that. They weren't making much money, but I do think they likely need to really do whatever they can to convince everyone to start recycling. There's a lot of precious metals, critical rare earths in computers, in all types of electronics out there. Very small amounts, but if you recycle big amounts, these critical rare earths are very important. Everything from the superpowered magnets all the way up to jet fighter engines.
Right. Okay. All right. Well, thanks a lot.
Good call. Hey, thanks for calling, Charles. If you get a question or comment, you can give us a call at 7-339-1070. So this is a battle out there, and once you understand, it's like gold. I mean, why is gold going up? I mean, the debasement of the currency. Actually, we're writing the Max Out Savings Report. That's going to be one of the things. That's the debasement of the currency. They say the dollar, but what do we just say about Trump? Trump's put $300 billion. Trump has come in and he's growing the economy. Trump has come in and he's also going to sit there and get he's reducing regulations. Trump is trying to get interest. He's doing everything he can to stabilize the dollar, stabilize our financial situation. Now, in the rest of the world, it's much worse in Japan and France now. But it's not just dollar debasement. It's the concern of war. It's the concern of a new financial system led by the Chinese that's moving gold and silver. And that is the really important thing out there. The Chinese have recently begun. They're now allowing convertibility of gold to dollar to the yuan in their Hong Kong. So you can put gold in their vaults there and convert it back and forth. And that's what they're looking to do around the world as they're trying to get away from the dollar. And this is why the gold is going up.
Ted, you have Ron on hold.
Okay, and silver is going to do the same thing. Let's take a quick call from Ron. Hey, Ron, how are you doing?
I'm doing well today. Thank you, Ted. I was listening to the news yesterday regarding the rare earth, and the people that I was listening to seemed to be knowledgeable. They were part of our government. They said that we had every bit as much rare earth here in America as they do in China, but we didn't want to develop it because the process is so dirty and nasty, and the residual product that you have left is very difficult to get rid of. Also, they said that it was located mostly out in Nevada, I think. So sounds like they knew what they were talking about.
Yeah, no, I think that's very true. I mean, it's a tough business, but it's got to be done, and it's a critical situation, as we talked about. You know, now my friend they went investing in this stuff years ago. They weren't doing it because they wanted to make a huge amount of money. They felt it was critical to the U.S.'s national security, and I mean this is a critical thing to our national security now.
Yes, it is very critical, but I think. They were talking like the way Eisenhower started and did the interstate highway system. That's the kind of effort we're going to have to make to get after this rare earth development. So I think it's there.
Yeah, it's going to take it's going to take a kind of a World War II type, but it has to be. Ron, the critical thing is it has to be a World War II mentality of it's not a matter of money, and it's a matter of we got to get the job done. What's it going to take? It's going to take 3-4 years. No, it's going to be 2 years. What's it going to take to get it done? And then you work from there. You don't let things stop you, and you keep moving forward with it.
So while we're here, what are your thoughts on silver and gold? I think it's still moving up.
I think it is too. It's above 50. It's hit 50 twice. This is the first time silver's traded over 50 in 45 years. Think about that. Now, if you put it, and it also got close to 50. That was in 1980. In 2011, it got close to there as well. But if you start putting some inflation-adjusted numbers in, I think this goes much higher. Keep in mind, we talked about on the show. I think we wrote about it on Max Out Savings Report. We've had 5 years of deficits in silver use. I mean, in mining deficits in silver, and so there's huge demand for silver, for solar, for AI, for electric cars, for everything, and I think this goes higher. And gold at $4,000 an ounce is forcing more people to buy silver. The interesting thing is and I'm going to expand upon this after the break too, is that people are lining up in Asia to buy gold and silver now.
Exactly.
So
well, Ted, appreciate you giving me the time. Have a good day.
Thank you. If you want to call us 713-339-1070 here on the Max Out Savings. But all of these things, to understand rare earth minerals, okay, take a pen or a safety pin or something, stick it on the back of your iPhone, and it'll stick to the phone. There's a magnet in there. That's what we're dealing with, all this stuff out there. And, there's magnets in all types of things, and that's just one thing. In some cases, these rare earth minerals will fundamentally change the structure of a metal to withstand super high temperatures or super cold, or they maintain their ductability in those type of temperatures ranges, and they're very important for everything we do. We live in a very complicated world, and it's really built on rare earth minerals. And like I said, World War II. The Japanese went into Southeast Asia because they needed oil. They needed other commodities down there that they had, and that was, if they hadn't have done that, and the U.S. wanted to stop them, the Japanese might not have entered the war. And so this is a big thing, and this is something we want to watch closely. And the talk of China is very hostile. Is not the type of talk that we're going to have a deal, tomorrow afternoon on. Keep in mind, I thought we had we had an agreement with the Chinese on this rare earth minerals a couple months back, and because it was a big thing, and then we announced an agreement. Well, obviously something happened, and again, you really have to understand this. There's a possibility we could have war with Russia or China. It's not going to be for sure, but it's not a remote possibility. The United States is very clearly preparing for the possibility. Is it 20%? Is it 33%? I don't know, but it's a number that you have to take very seriously. And this is what makes these things, somewhat concerning. At the same time with the move up in gold and silver as well. Anyway, tell you what, let's take a quick break. We'll be right back right here on the Max Out Savings Show.
Savings and investment questions? Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Comments, give us a call, 713-339-1070. Talking about the markets, here are the numbers. The market hit a new high on Thursday, and then it fell apart when Trump came in and mentioned the tariffs. There was a lot of froth in the market. I mean, everyone was pretty much convinced that the market was going to go straight up into year-end. Portfolio managers were loading the boat on stocks so it looked good to year-end performance, and AI was going like crazy. Even when you talk, I'm like, wait a minute, this AI seems a little bit circular. NVIDIA is giving $100 billion to ChatGPT, and then ChatGPT's committed.
Ted, we have Barry on the phone. He said he didn't get clarity on the rare earth minerals he's holding.
Okay, tell you what, we'll take that. Hold on just a second. Put him on here, and I'll get to. So then ChatGPT agrees to spend $300 billion with Oracle to 2030, and then Oracle agrees to spend $100 billion or more, on more chips from NVIDIA, and so you're starting to wonder about the whole thing. So is Barry on yet?
Hello. Yes. Good morning.
Barry.
I didn't get clarity on the rare earth minerals. If this is so precious, why aren't Wall Street investors all over it? It may be a sloppy process, but if President Trump is saying we need these rare earth minerals, and other callers said we have them here already, Why aren't we digging them?
Well, they're starting to. And there's a company called MP Materials, which the Trump administration put some money in. There's some others too that have properties that are close to being done, and so they're starting to come in. The problem is there's not that many companies. There's like 3 or 4 companies in, and that's about it.
Okay. Wall Street doesn't see this as a gold mine?
Well, the problem is it costs a lot of money to put this stuff in, and I mean, you got a good point. I mean, candidly, why didn't MP Materials get a whole bunch of money from everybody else? Why did it take the government to do it? I mean, that's a very fair question, because they don't view mining stocks as good as AI stocks and stuff, and so I mean, that's actually a really interesting question. Now that I think about it, is why didn't they fund this stuff?
And I love the way you throw around $100 billion. It used to be that $1 billion here, $1 billion there, soon you're talking real money. Now $100 billion here, $100 billion there, and pretty soon you're talking real money. Huh?
Yeah, no, that was originally either Bunker Hunt or Senator Dirksen, and one of those two are the ones who used those numbers. But that was back in the 70s. But does that clarify it?
Oh, yes. It does. I was just wondering because Wall Street is normally all over anything that's going to produce, but you're saying the investment is going to be too steep, and it may be a while before you see the rewards. Is that it? The reason why they're hesitating?
Returns, and they feel it'll be choppy and not super profitable is the problem. I mean, actually, it's a good question. I mean, to that question, honestly, it's like, why didn't Wall Street do it, but they didn't? And, I mean, it just seems like it's pretty bizarre, but they're throwing billions of dollars at these AI and everything else, but they didn't. That's an excellent question, but that's kind of the best I can give you.
And is it true that NVIDIA, in the short time it's been around, has $4 trillion in market cap?
Yeah.
Whoa. Okay.
Unbelievable, isn't it? Thanks, Barry. But that's good question there. But Trump is on it. What he's done. We mentioned this. What Trump is really doing is he's dusted off the playbook that China used against us since entering the World Trade Organization. I think in 1995. Taking factories, getting factories, setting things up so to ensure that your factory, you get the manufacturing, and he's kind of doing the same thing. But behind this is the question is, is this wartime thing going on out there? And if that's the case, then it also raises questions. Markets don't do well in wartime, and so, and I hate to bring this up, but if you'd asked me, and I think we're pretty good we do a lot of macro research to come up with projections, which we use a lot of that to work with our risk management in the accounts. When it comes to Putin in Ukraine, I would have said, I'm shocked. I'm really shocked that Trump was unable to get a deal with Putin. If you look at it, when they met in Alaska, Trump it didn't go well because Trump had dinner all prepared, a lunch all prepared for them, and they didn't give him the lunch. And, they didn't make a big deal of it at the time, but, and they left, and it didn't go well. And I think Trump really wanted to get a deal, and I think they were willing to compromise a lot, which really makes you wonder what the issue is out there. And it's the same thing with China. I mean, some of these things should be much easier to solve than they are, and so. What's going on there? Russia's been shipping munition, plane loads of armaments back to Iran recently, and so the question is, if this thing can't get solved with negotiations, where does it end? And that is not an insignificant thing, and so I don't think this is priced in these markets, and what I fear is the gold is kind of telegraphing that, because I'm like, wait, it doesn't make sense that if everyone thought that the dollar was being debased and that they need to go on gold and silver, there'd be lines out the door at U.S. coins here in town and everything else. But instead, the lines are there's huge lines for gold and silver in China and in silver, particularly in India now. They're starting to line up and buy it. And this is most other movements in gold have been controlled by the U.S., the U.S. investors, particularly in the 70s, in the commodity markets. Particularly the commodity markets control these things. So then how they got the hunts who had cornered the silver market is they changed the rules on them and forced them to sit there and liquidate their silver. It doesn't make any difference. If they change the rules on silver and gold, it could drop it some, but the Chinese and the Asians are going to buy. This is a physical demand market right now, and so the commodity markets don't have control of it, and they seem to be having shortages on the London gold and silver exchanges. With some of there seems to be some rumblings of that happening out there. I think before this is over, there's going to be shortages of silver out there, and that's what likely has. But this is a physical demand. China they don't want COMEX contracts, okay? They want the gold. There's a delivery option on the COMEX. They want delivery. These aren't groups of people speculating. The people waiting in line to buy gold aren't speculating, and they're going to blow it out if it goes up $5 an ounce. And that's a fundamentally different type of bull market, and this is something that we want to watch and see. And you can see them. They'll try to blast silver down under 50 to create a bunch of selling, and then it just kind of goes back up again. The same with gold. I mean, candidly, $50 silver and $4,000 gold is a pretty easy place to sell down to people for it, but it's not happening as much as it should be. Now, it might happen in the next couple of weeks. We've gotten a little more cautious on the sector. But that tells me gold is not. It's not like everybody thinks that they're talking about debasement of the dollar. I think it has more to do with a possible new world order on the monetary system, or possible concern of war or something else out there. A new monetary system that China and Russia and India and other Brazil and places like that are all trying to create, and that's what you're dealing with there. And so, this is kind of the question out there. When it comes to the dollar, interesting thing, we've been talking the dollar's going down, but really recently we've been saying the dollar's going to go up a little in here, because kind of what is happening is the line everybody uses is the cleanest dirty shirt. If you look at it, let me preface this. The dollar was down about 10%, give or take, this year. That's the worst performance since 1970s, the worst performance of the dollar. So the dollar's had a big sell-off. But right now, France is on their third or fourth prime minister in the last 18 months. They have massive deficits. Their deficit to GDP is about 5.5% of debt to GDP. It's one thing if we're running 6% because people believe in the United States. Nobody believes in France. They have real problems over there. They can't control their entitlement spending, and they're in trouble. Look for the euro is going to be under pressure. If you look at Japan, the debt is out of control there. Interest rates are starting to go up. If you look at the 10-year Japanese bond, the rate has been rising, and that kind of affects other things as well. It affects the carry trade, among other things. But what we're looking at there is really the same type of thing, is an unstable situation. If you look at the Treasury yield on the 10-year bond on Japan, it's gone from about 1.1%, maybe 1.1% up to 1.7%, and that's a big number for Japan. It's not big for us, but for Japan, and Japan has about over 200% debt to GDP. I think we're about maybe 116 or something. I forgot what it is right now, but they have twice the debt level that we do, and over twice the debt level to GDP. And so, and the Japanese, a lot of people have been borrowing Japanese yen, paying close to zero, and then investing overseas in the United States. It's called the carry trade, and that's kind of blowing up out there. And so it's just another situation. I know all this stuff is kind of sort of in different all over the place today, but it all ties together to a much more unstable world we live in. And this is why you have to have risk management for your retirement. You have to diversify your assets into stocks, large cap, small cap, more value. You have to have bonds. I'd lean towards short-term bonds, overseas bonds, commodities, precious metals. You have to have all these type of things in place to manage through these type of things. We're monitoring our stuff. We're down some Friday, and I think we were close to 2% better than the S&P 500 on Friday, and that's what we want to see happen. But you've got to manage your thing. I think this is going to be a much more complicated, a much more volatile world. And when it comes to retirement savings, you have to manage risk. People have been bailed out.
2 minutes, Ted.
How many minutes? 2?
Yes.
Okay. People have been bailed out. The market fell 10 or 15% in 3 days, about 10%, but it fell some more for that. It actually, within about a month, fell almost 18%, but then it got bailed out and had the biggest recovery since April that we've seen in one of the biggest in history for that short a time. And it's happened before. Quickly the Fed comes, and the next couple times the bailouts aren't going to happen as quick. It's going to be much, much tougher to get things going, and it's going to be more of a macro world. This is much more like the 70s, and you have to protect your retirement, because if your retirement goes down 40 or 50%, that puts a serious hurt on your ability to draw income. And I think this is not well understood by a lot of people out there. This is why we talk about these big macro issues. If you need some help, a couple things. We have a free newsletter, which will get written over the weekend here, the Max Out Savings Report, talking about these big issues, talking about the big issues in the world today. It's free. We talk about retirement. There's a lot of interesting things happening in retirements going into 26 I'm going to be writing about. It's completely free. It's the Max Out Savings Report. Just go to maxoutsavings.com. It's maxoutsavings.com. Sign up for the free report. And also, if you need some help with your retirement, if you have an old 401k, you're retiring, you want to talk to us about managing it, that's what we do at Max Out Savings Advisors. We're value investors in the stock and bond market. We have our assets held at Charles Schwab's, our custodian, and then we manage it for you. And using our value investing approach and risk management. If you need some help, I'll sit down with you personally here in Houston, Texas. Just go to our website, maxoutsavings.com, get the phone number, give us a call, or send me an email at ted@maxoutsavings.com. I hope everyone has a great weekend. Remember our motto and philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. Save aggressively, invest conservatively. So I hope everyone has a great weekend.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.
AM 1070.